My name is Barnaby Fletcher. I'm a senior analyst with Control Risks. Just to give a quick overview of Control Risks, we do what the name suggests. We help clients identify, understand, and mitigate risks. Okay. We help clients identify, understand, and mitigate risks, political risks, security risks, integrity risks. We have 41 offices around the world, including a big office, the hub for our SADC business in Johannesburg. And we work with clients from every country and across every sector. In the past 12 months alone, we have done projects in every single country in Africa. And although I cannot state this with absolute certainty, I'd make a fair bet that at some point we've worked in every country in the world. I mention this because, to be frank, it's the only reason I am here. I am not an expert on the property market. And if you want a detailed breakdown of South African politics, well, you had the excellent panel before lunch. But hopefully the global perspective that Control Risks is afforded by its network of offices and its client base will be of some value in a panel that is, after all, entitled South Africa versus the Globe. So let's start by looking at Africa as a whole. The headline is that after a difficult few years, Africa and particularly sub-Saharan Africa is starting to recover. It's a gradual recovery. There are a lot of hurdles, but it is a clear recovery. I'm not going to run through the economic figures, but I will emphasize one point. This recovery is based on far more than just the faltering increase in commodity prices we've seen over the past few years. 5 years ago, for Control Risks, about 70 to 80% of our business in Africa was oil and gas or mining clients, primarily foreign companies. In absolute terms, the volume of business from this client base has not fallen, but the extractive sector now accounts for just about 30% of Control Risk business in Africa. We are seeing much more work from manufacturing sectors, logistics, FMCG, finance, of course, construction and property developments. This diversity that we're seeing at Control Risks is reflected in FDI figures, and this diversity is really healthy for Africa's long-term economic prospects. Now, what is driving this recovery? Obviously, there are underlying factors that make Africa attractive. Its demographics, its natural wealth, its proven ability to leapfrog technological paradigms in sectors such as telecommunications or finance. But its recovery right now, at this moment, is being driven by a number of internal and external factors. So internally, over the last few years, we have seen a series of often dramatic political changes that have brought in new leaders with ambitious reform agendas. So we're looking at Angola, Ethiopia, arguably Zimbabwe, although clearly we haven't seen any improvements yet, and of course, South Africa. And while these may only be a few countries, they attract excitement, they generate interest in Africa, and they feed into another key driver of Africa's recovery, which is competition. As Africa gradually diversifies its economy, countries can no longer rely on simply having the best natural resources. There is growing competition for investment, helped in part by the fact that trade barriers are gradually reducing, which is giving companies more choice in where they base their operations, and that is driving improvements in legislative and regulatory frameworks throughout the continent. Now, implementation of these regulations is another question for another time, but on paper, there are some excellent legal frameworks and very attractive legal frameworks throughout the continent, throughout a variety of sectors. Now, externally, there are also factors playing in Africa's favor. Geopolitical interest in Africa, and this is often lost because of the headlines about trade wars and Brexit, but geopolitical interest in Africa is rapidly increasing. There are specific reasons for this for individual countries. Brexit Britain is desperate to sign new trade deals. The US is anxious about China's influence. But there are also more fundamental drivers. Africa may still only account for a disproportionately small part of the global economy, but it has political clout that is often underestimated. It is, for example, the largest voting bloc within the United Nations General Assembly. And in an era where the global institutions for fostering cooperation are under threat and increasingly countries are turning to realpolitik, there's no surprise about why a number of players from Russia to China to America are looking to increase their influence on the continent and gain some allies. Now, savvy African leaders have exploited this geopolitical competition for their own benefit to secure investment and to secure funding. It is no coincidence, for example, that Kenyan President Uhuru Kenyatta planned trips to both the US and China within a week of each other late last year. Now, Africa is also looking increasingly attractive compared to other jurisdictions. I mean, there was some mention on the panel before lunch of this and the problems we're seeing in other parts of the world. And look, there's no doubt that in terms of the operational environment, a place like the UK still is easier to operate in than many, if not most, African countries. But there's not a single African country that is threatening to potentially rip up every single trade agreement it has within the next few months. As a British national, I look at my country's politics and, to be honest, I despair. I look at the escalating trade war between the US and China, the rise in populism throughout Europe. It's all somewhat concerning, but as somebody who spends his professional life looking at sub-Saharan Africa, it is a great pleasure to be able to talk to clients about risk in Africa with all the assumptions and stereotypes that unfortunately are still made, and be able to say, you know what? It's not bad. So, if Africa is looking quite positive in comparison to the rest of the world, how is South Africa looking? So I'm not going to come from the UK to South Africa to tell you about the challenges that South Africa faces. I'm sure they are familiar to everybody here. They were laid out in previous panels. But I can tell you what our international clients see when they look at South Africa and the concerns they come to us with. South Africa has a problem with its narrative. Ramaphosa is a pragmatic president with sensible reform ideas. There are, of course, caveats to everything I say. There were challenges identified earlier. But he is reform-minded. And unfortunately, his story is overshadowed by Abiy in Ethiopia or Lorenzo in Angola and the extreme reforms that they have announced. This is despite the fact that South Africa, or Ramaphosa, has at his disposal far greater human and institutional resources to actually implement reforms. We're seeing the reforms, the ambitious reform programs in other parts of the continent already start to run into hurdles. And yes, that's happening in South Africa as well. But arguably, South Africa is a better place to overcome those hurdles. Controversial topics such as land expropriation have damaged investor confidence. They have not been helped by some pretty hysterical reporting by some international media outlets. It is one of my job's great ironies that I spend much of my time as a risk analyst assuring clients that the risk of their office block or factory or operations being expropriated is actually low, and the risk is not nearly as high as they think it is. Now, you can take the corruption scandals and the state capture that have dominated headlines about South Africa throughout the world, and obviously they point to issues of concern. But the other key point about that story, the remarkable strength and independence of South Africa's judiciary, is never mentioned. It's not put out there. South Africa may no longer be Africa's largest economy, but it is the most sophisticated large economy in one of the most exciting regions in the world. The concept of South Africa being the gateway to the continent is not a concept that gets much airtime anymore, but it still is Africa's financial hub. It does have the best infrastructure. It has the highest concentration of expertise. This is a story that South Africa should tell, and that is important that it does tell. The one thing that I have learned from talking to hundreds of clients from all nationalities across all sectors is that so many investment decisions, especially unfortunately when it comes to Africa and even when it comes to South Africa, are still guided by superficial headlines. To give you an example of this, during the West Africa Ebola crisis in 2014, I had a client cancel a pretty important business trip to South Africa because they were scared of Ebola. In vain did I try and tell them that they were closer to the nearest case in London. Just to end off, the Africa Risk Reward Index is something that Control Risk puts together twice a year with our economics partners, Oxford Economics, and their Africa-focused subsidiary, NKC African Economics, which are based very close to here. The concept is simple. We assign each country a risk score based on a range of political and economic risk ratings, a reward score based on a series of economic indicators and forecasts, and the size of each country bubble corresponds to the size of its economy. The next edition is coming out 15th of July. You can download it from our website if you're interested, but the initial scores have already been worked out, and here you are seeing them for the very first time. Of course, this is a very blunt instrument. You have to examine each opportunity on its own merits. Risks differ and rewards differ from sector to sector or from location to location, even within a single country. And attempts to compare countries through rankings or indexes like this is never going to capture these nuances. Nonetheless, I think this does help illustrate the point I am trying to make. There may be huge excitement over Mozambique, for example, or Cote d'Ivoire. And I think a lot of that excitement is definitely justified. But this excitement overshadows the simple fact that there is still really only a handful of truly sizable economies in Africa and truly sizable markets. And of that handful, sure, South Africa may at the moment not offer the same rewards as some of the others, but it is the clear winner in terms of the level of risk investors face in order to access that reward. Thank you.
Thank you to all of our panelists, and I really look forward to this. And I already made my disclaimer to them that I'm by no means an economist of any great acclaim, but I'm going to ask some of the most obvious questions. And I think let's just start out with your own perception of our country based on your experience, your research, and your travels. And Preston, maybe we can kick off with you.
Sure. We're a large-scale urban land developer in Kenya, Ghana, Nigeria, Zambia, and DRC. And essentially, we're building, in South Africa terms, waterfall city-sized developments in these countries, so very, very large scale. We do not invest in South Africa, but we come to South Africa regularly. Why do we like South Africa? There's a massive amount of talent here. There's a huge amount of experience in the real estate sector. Probably the South African real estate sector is about 20 years ahead of the markets where we are investing now. And for that reason, we find both talent here, expertise in the industry, and also South African corporates, the ones that have already ventured or are ready to venture into Africa to invest there. We view as an investor, South Africa would be overpriced for our model. We go into markets at a much earlier stage, and we believe that the market is stagnant. So we believe that all the growth is not going to be in South Africa, it's going to be into Africa.
So still supporting the sort of gateway narrative, though?
Yes, I would call it a gateway for expertise that has been developed on a phenomenal scale, on a world-class level over the last 20 years.
David.
Hi. I actually really like Barnaby's. I'm a simple guy, so I really liked his little XY, where we are on the map and everything. And also, as an American, but living and working here, I think that in some ways, I can see and understand the South African perspective, but I can step back a little bit. And, I think we're very hard on ourselves in terms of what we think, when it's horrible, it's the worst ever. But when it's great, it's also the best ever. And I think that we can really see that in South Africa. I don't think you can discount, it's not always just about the deal. And yes, maybe there are better deals in the DRC or that in terms of your higher returns, but the risks, as we can see, are dramatically more as well. We have a very, very good judiciary here. All of the things that make property a great investment in the first world with much smaller investment returns are here in terms of the basic rule of law, independent judiciary, great professional teams, consulting engineers, etc. They are here, and so you can get all of those things that anyone who was investing or developing, which is what we do. We invest and we develop residential and mixed-use developments in Cape Town. If you look at what they're doing in America or in Europe, we're doing just literally the same thing with an expectation of much higher returns.
I want to get back to the returns issue in just a second, because that's essentially what our conversation is going to pivot on. But Evan, just your landscape picture of South Africa then.
Look, we're South African-based investors, so it's far more local perspective. Though investing in the JSE, obviously you've got a global perspective. We all and everybody in this room is well aware of the challenges facing South Africa. But if you look at the price, or maybe on the returns that you're speaking about, things are pretty cheap. You got to look at risk and returns, and there's some pretty bombed out sectors out there. Even things like our bonds offering great value. I think it's commensurate, or more than commensurate with the risks, and you have to always juggle both of them.
So here's the thing. I mean, the money will always follow the returns. That's the conventional wisdom. You've painted a really great picture of South Africa from a stability point of view, from a historic point of view, and you've created a really wonderful topography for us of South Africa. Yet we do see, and we're hearing this more and more, that companies are starting to relocate their headquarters to other parts of the world, places like Dubai. And I heard an alarming statistic from someone who's quite renowned the other day of at least 70% of these multinationals relocating their headquarters elsewhere because of fears around political uncertainty and our economic numbers. And so there's a lot of negativity, which kind of stands in opposition, I think, a little bit to that sort of warm picture that you've painted, Preston. What are the numbers telling us?
Well, the numbers from our perspective and why we're not investing in South Africa is because the returns naturally are much higher in the markets we're in. Again, we're an early stage investor, so we are taking on higher risk than we would find in the South African market. At the same time, I think everybody is, as Barnaby mentioned, probably remembers the last headline they heard about the countries we're in, Nigeria, Kenya, Ghana. Maybe it wasn't a positive headline, but what is happening in those countries is what has happened to South Africa over the last 20 years as well. There's an economic transformation going on. There's improved governance. There are very, very positive things happening, watching these countries rocket up the ease of doing business surveys and becoming much, much more conducive to investment. So while there's a perceived risk, it's not as high, and I would argue that at the same time with South Africa, the risks here, one could also argue, have increased. The political risk, the corruption and the instability that has taken root.
I mean, to take a leaf out of Barnaby's presentation, we're not our own best champion when it comes to the narrative. Because again, what you're saying is in the affirmative, that there's every reason for people to continue to invest in our country. We have, strong institutions, when we get it right, we really do. The biggest issues that grab the headlines are around corruption, and that perhaps is not entirely connected to, to the kind of investment we're talking about in terms of property development and so on, although there is some intersectionality. So given that is the case, I mean, what it strikes me is that a lot of people, in the same way that, thought Ebola was in South Africa, think that Africa is a country, David, and, we've heard this quip made often.
Yeah.
So what we have to do then is what, explain more?
Yeah, I mean, in some ways, again, we, for good reasons and bad reasons, we're our own worst enemy. There's a lot of own goals, as I call them, in terms of how the political and corruption. So the bad part is that there's corruption. The fact that if you would think that there's only corruption in South Africa and not anywhere else in Africa or Europe or America for that matter, you're mistaken. There is corruption everywhere. On the good side is we have a very, very free press, which is highlighting this corruption all the time, something you probably don't get in some of these other countries where the press is less free. So you have corruption here. It's out there because we have this amazing free press, but then that's what people read and say, oh my God, we have, we can't come here. And yeah, I mean, people, I think you can see it from the tourists. If you ever have an interaction with an American or European who's the first time they've ever been to Cape Town, they are very surprised to see the city as more than just a mountain and some huts that are around. I mean, really, it's actually quite bad in that way. So I think we need to do much, much more, certainly from an international investment point of view, to pull people into South Africa, to show people that you're getting the benefits of maybe not so much a DRC investment opportunity, but enough of that high-end, low risk and high potential, greater returns with all of the backbone of the infrastructure and the judiciary, et cetera, that you wouldn't get in Africa, and it's all here waiting.
I mean, it's interesting if you look at our last set of GDP numbers, the tourism also took a hit over the last quarter, whereas, we need to be moving in the opposite direction. Perhaps if I can persuade Evan then to, just to kind of lift the lid a little bit on the kinds of investments in your portfolio, but you can take a perspective on the industry as a whole. That if everything is working, are the numbers supporting the fact that the landscape is good for investment? Or are we seeing that investment pool shrink more and more? And if we are seeing it shrink, where's that revenue going? Where's that money and investment going?
Look, the local environment is tough. I mean, I think looking at property, or listed property in particular, we're used to growth. We're used to companies ever increasing the dividends, and that's slowed down tremendously. So what we used to, and that's, many other countries didn't have the luxury of that growth. Some of it was the way we got escalations in our leases and the way the market's structured. But I mean, that landscape's changed. So the landscape, and for many outside these green pastures in terms of not necessarily long-term growth, they can get offshore, but funding costs and security, much lower funding costs. But still, the landscape here isn't that terrible. If you take, I think what people miss is we still have some growth. Long-term, I'm not buying the cycle now. If you invest overseas, you're not going to get much rental growth. If you invest here, you are going to get rental growth, hopefully, and that will feed into capital growth, which you won't get in other places necessarily.
And if you're asking people to hold the line, I mean, what sort of timeframes are we looking at? I mean, are you expecting, a recovery barring, a miracle that happens tonight in terms of an announcement?
No, I don't think you can invest in South Africa in property with a short-term horizon. In property is always long-term, and especially now, you've got to have the patience to take a longer horizon. And things can fall in the short term, but I'm talking long-term. Once you're back on track, you can get the growth. Inflation helps as well, of course, which may... But you've got that, but you've got to have a long-term horizon. There's no way you can invest in the short-term horizon.
So hold the line is the message there. Barnaby, maybe to come back to your presentation and maybe share with us what comparative markets there are, across the continent. They kind of mimic South Africa, which might be a bit more palatable, less politically and economically controversial, that people are choosing as an alternative to us.
I don't know if this... Nope, that microphone doesn't work. Sure. I mean, look, the alternative markets are fairly obvious. They're the ones you'd think of. They're Nigeria, they're Kenya. Ethiopia is trying to establish itself as a hub, especially, playing on the strength of Ethiopian Airlines, but it has a long way to go before it's a hub for the continent. And then you have the kind of smaller players like the Rwandas of this world, which are, trying to position themselves as the place to base business. I think there's a number of factors, three main factors that will really help South Africa going forward. I mean, the first thing to say is South Africa is not going to be the hub for Africa. Africa is too big, it's too complex. The idea that a single country can serve as a hub is just, it's not realistic. But going forward, one of the key things that is going to help is this gradual withdrawal of trade barriers with the African Continental Free Trade Area. We don't expect rapid progress on that. In fact, we expect it to be extremely slow. But it is going in contrast to the rest of the world, which is becoming more protectionist. And generally, as you remove trade barriers, the bigger economies, the more sophisticated economies, the ones that already have sophisticated manufacturing bases, benefit. And in the SADC region, that is South Africa. You also then, South Africa, in terms of, again, this concept of being a gateway, not necessarily into the whole of Africa, but at least to the immediate region. You have things like the New Development Bank playing on the BRICS, and South Africa being that hub for financing and development finance through its participation in the BRICS and other kind of its leading role in other international bodies. And then the third thing I would mention, which I'm just trying to remember what the third thing I was
horrible when that happens live, eh? What was that thing again?
Was going to be. Oh yes, so I went to a very interesting talk in London just a few weeks ago where the head of the Johannesburg Stock Exchange was speaking. And I think that could be really key. She was talking about the initiatives that the Johannesburg Stock Exchange is doing to link up with other stock exchanges around the continent in order to make it easier for companies to dual list. And that may seem like a pretty technical detail in comparison to some of these broad overarching themes we're talking about, but that is really important. Initiatives like that are really important because they allow, if, again, there's a long way to go before that happens, but if there's progress in that, they allow international investors to meet local content obligations, listing on local stock exchanges, while still having the access to and protection of the far more sophisticated market, the world-class market of the Johannesburg Stock Exchange. So all these trends are pretty long-term, but they are all moving in a direction which South Africa should be able to capitalize on.
So again, it's about just being incredibly sort of strategic about what we pursue, which doors we open up. I mean, I'm just thinking, and I had a look at my iPad now to confirm the stat. Something like 237 special economic zones, barring the new, the African Continental Free Trade Agreement, which is, I think now, it's finally been sorted out after a couple of months of being up in the air. Some of these SEZs are still under construction, but there is enough that we have to really activate and trigger, higher volumes of trade and making things easier. Yet we don't. I'm wondering what's it going to take to kind of trigger us to do the things that you say are obvious that we can do with some really immediate gains. I don't know if the pair of you have a comment on this. You both seem to be looking at Evan. So I'm going to either throw it to Evan or to David.
Go ahead.
Well, I think that I'm just thinking about the question because we're talking a lot about South Africa's place in Africa. Where if we're talking about SAPO and if the money or the institutional money in the room is looking for a home, I think their question is, do they stay in South Africa or do they go abroad? And I would bet that most of them who are thinking about going abroad are not thinking about going to Africa. They're going to safer markets with lower returns.
Are these perceived safer markets? So maybe just tease that out for us a little bit.
If you look at where the big funds, real estate, the REITs of South Africa are going. They're not going into Africa. They're going into Europe or Australia, some toying with America, because I think people, if they have enough risk, if they're saying they have enough risk in South Africa, they're trying to go for less risk. So I think the question is more
like Brexit.
Huh?
Like Brexit.
Yeah, exactly.
Much less risk there.
Well, okay. As I said to you before, we had, as a real world example, we are a local residential developer in Cape Town, and we were looking 2 years ago, or whenever the vote was, to look at an offshore opportunity, and it's very natural as a South African company to look at the UK. We were looking at the UK, we went as far as started doing due diligence on some sites, local partners, etc. We started talking to them, what do you guys think of this vote and referendums coming up? They're like, probably not, don't worry about it. Vote happens, Brexit. We continued on for the next few months, and then we pulled out. We said, why, as South Africans, do we go to the UK for political risk? So we started looking at other markets.
And I think that's a really important point that you make. I think you want to come in as well, Barnaby, because why are we not thinking about Africa? Is it only a perceptional, issue, or are there real risk factors from a regulatory point of view, even from the perspective of political uncertainty?
So just to make a quick point, there are clearly real risk factors in every country in Africa. They vary from country to country. There are real risk factors in every country in the world. But if you look at the investment figures for 2018, and I don't want to go too much into this because I'm not an economist, but globally, foreign direct investment fell by 13%. In Africa, it increased by 11%, especially in South Africa. I think the increase was much higher.
Yeah.
Now, what is interesting is that in previous global downturns, not everyone, but typically Africa has been disproportionately hurt because there's a global economic downturn, investors want to withdraw their money to where they feel safe. And the fact that Africa has bucked this trend, this again is 1 year of data, so we can't make any definite statements, but the fact that this year this doesn't seem to have happened, or last year, suggests that investors are becoming a bit more comfortable with the idea, or at least in comparison to other markets around the world, they're more comfortable with Africa, and they are more familiar. We've spoken, and I mentioned in the presentation, some of the more ridiculous lack of knowledge, perceptions of Africa as a country. But in general, there's no doubt that our clients from Control Risks are becoming more and more informed and come to us with more and more interesting questions.
Yeah, Mom, can I make the point about the investments jumping over Africa and into Europe? There have been some, it's not a rosy picture for quite a few South African companies in food and beverage, in hospitals, in medicine that have gone into Europe, in logistics. One, they've either been hit by political turmoil in Europe, namely Brexit, and other areas, and they've also gone into stagnating markets where demographics are not as spectacular and as interesting as they are in Africa. At the same time, if you look, there's a huge amount of South African corporates that are in Africa now. And if you look at their annual reports, if you take some time to look at it, they're doing spectacularly well. Some have some bad experiences.
Can you say that again? Because I'm not sure that,
Yeah, there are South African companies in Africa, corporates, in many sectors that are doing very, very well. What happens is you get a headline about MTN out of Nigeria, and then there's a broad perception in South Africa that it's not good to go there. But whether you're a Bevcan, a Promasador, a Distel, which has some of its highest growth in Kenya, whether you're Advatec, opening up Crawford schools in Africa. Advatec's share price moves when they go into Africa, when they open up a new school. There's a lot of good news happening there against the broader, I would say, misperception that Africa is only about more risk.
And maybe to put this to you, and then I'm going to give you the opportunity to ask our panel some questions. Barnaby raised this as well around the perception of land, that there was going to be this immediate sort of, well, there's some kind of panic and uncertainty about, how the issues in our legislation around land are going to evolve in land. Maybe from your perspective as well, is to talk about specifically with regard to property, and you can look beyond South Africa's borders, about why we should believe or spread the gospel of stability, particularly when it comes to issues that are highly contentious like land. Not in our country, maybe some of the other countries as well.
Look, stability is important for property because of the long-term investment. So you've got discount rates for a long time. You need that stability to get to sell something in the end. So it's particularly important in property. But we're talking about land rights and land. We look overseas and we all get concerned about South Africa. One of the biggest items of news in sort of international listed property the last week or so was in Germany, in Berlin. The city government has passed a 5-year rent freeze on residential. Now, I don't know whether it's legal or whether it's going to happen, but I can imagine what Sipho is going to do if there's going to be a 5-year rent freeze in South Africa announced tomorrow. We'll all be up in arms about South Africa and Berlin. Look, I don't know, again, whether it's going to go through, but there's risks everywhere. We tend to think everywhere else is riskless or doesn't have political issues or distribution issues, political issues. It's everywhere.
And aside from Brexit, I don't know if any of you want to make a quick comment about which other territories outside of Africa also carry, a great deal of risk for investment, particularly in the property sector.
I mean, we are only currently South Africa-based with a small European presence. So, I mean, I can't really speak to African countries other than, the ones that I've been to and you can see. And we've had some deals come through, but I think maybe our experience has been more typical of what you get, where there's a lot of potential and there's all this, but you need to talk to this minister, you need to do, all the traditional stuff. And once you get into that, you kind of walk away real quickly because you can just see where it's going to, you've seen that road and it's not a good one.
A lot of sort of advanced money along the way.
And that doesn't happen in South Africa.
Not for us. We don't do that. So, and I think that
okay, so say that again as well.
No, I think what everyone needs to make a stand, and I think there's again a perception that because we have a very strong media, which on every day, and I don't blame them for it. They're just very good at their job. Charming about this type of corruption or that, and there is certainly corruption. I mean, at all levels of the playing field here, but. If one makes a stand and says, we're going to not operate like that, then you don't operate like that. And then you cease to consider that as part of your investment or business strategy, and then it just goes away.
Maybe just a final word then from you, David, and from you, Evan, and Barnaby as well, as to why over every other, but I think you've answered this for yourself. I mean, you're based here, you have very little exposure outside of South Africa, so maybe this can just be for Evan and for Barnaby, is why is this still a compelling place to invest in the property sector over and above anywhere else in the world?
Look, it's a hard sell. I think for South African, you need to have a diversified portfolio. To say to a
You
South
have to
African,
practice your pitch in the mirror
to
10
say to-
times.
No, to say to a South African, everything should be in one country in the world but a lot of your risks are in South Africa and your lifestyle is in South Africa. So you've got to bear that in mind. But you are getting, certainly a listed sector, you're getting a very high return in South Africa at the moment with the risks. I wouldn't say that South Africa would be better than every other country. I think it's hard at the moment. But if you look at our stock market in general, it's been one of the best performing stock markets in the long term in the world. So if things turn out fine, you're going to do very well. If things don't turn out fine, well, that's the risk you're taking.
It sounds like a line out of Gladiator and Russell Crowe's statement on the battlefield. Hold the line. That's what we need to do in South Africa, Barnaby, it would appear.
So yeah, I'm not going to talk about the property market in particular because I'm not an expert in that. But in
So
terms,
careful these risk analysts are. Very careful with the wording.
but in terms of why South Africa generally is, an exciting investment destination, or should be an exciting investment destination. I mean, we all know what challenges South Africa has, and I don't want to downplay them or pretend they don't exist, even though we're kind of putting forward a broadly positive picture. But the simple fact is that Africa as a whole is arguably or at least one of the most exciting regions in the world in terms of kind of global trends. It's moving in the right direction. It's moving towards reducing trade barriers where a lot of the rest of the world is moving towards protectionism. Its risk profile, it has a series of more pragmatic, reform-minded presidents, whereas a lot of the rest of the world are now encountering their wave of populism, which arguably a lot of this region experienced in the kind of past 10 years. South Africa within that, look, its rewards are not as high as potential returns are not as high as some of the other markets, but they are still higher potentially than a lot of the more developed markets around the world. And its risk profile is, despite the headlines, still far lower than a lot of other markets in Africa. And I'll come back to the point I made in the presentation. South Africa needs to sell itself better.
Well, thank you so much to our panel. And I know that I've used a lot of sartorial references this week. And what I will say about this one is it's like when you buy a new pair of shoes, they're going to be, especially if they're leather shoes, because it's always got to be leather shoes. You're going to have the calluses in the beginning. There's going to be a few blisters, but it's going to be so dreamy and worth it after a while. And I think that's the analogy I'm making with the South African property sector right now. I hope it's apt and that it fits. So I think the message to everyone in the room is to really stay the course. It's not going to be a midterm gain. It's something you're going to have to take the long view on. Please give my panel a warm round of applause.